What is up, traders? Hope everybody's doing well. Today I'm going to be going over this trade taken in the final day macro. I'm going to be going over why I did take this trade. And actually, this was a losing trade before it was a winning trade. I did actually take a short before switching my bias and going for longs. So I'm going to be going over why I did so here today. So today I waited for the final day macro, and that was the only macro that I had my eyes on to trade. And simply because we had major news at the 1:30 p.m. Fed Powell spoke. So the session before would be low probability, and I'm honestly very proud that I did that because it was generally just very choppy price action, not the cleanest price delivery. So my eyes were on the final day macro here, trying to target any leftover liquidity. That was basically it. So I didn't even need a high draw on liquidity. All I was looking for was some sort of leftover liquidity from the session prior to target on the final day macro post Fed Powell speaking. So post major news. So my 315 macro comes in. I honestly did, first of all, take a short here because I was short biased in the beginning, trying to target this major sell side liquidity. We can see here on the 15-minute chart, major lows here that I was targeting right there, right? So what I was trying to look for was a sort of retracement before taking shorts, but I didn't get that. So I was looking for this sort of retracement to sweep out this buy side liquidity, tap into this 15-minute inefficiency, and then look for a short position to enter from there. But we didn't get that, and since we were very just pushing lower and lower and lower, so I thought that we might just continue lower from here and not get a retracement until later. That's why as soon as we closed below this up close candle, making it an order block, I simply ordered a short, entered the short there, stop loss above that high, and then try to target this major sell side liquidity. Obviously, that didn't happen. I got stopped out, and we inversed that order block, which is basically a breaker now. And once that happened, I immediately switched my bias to bullish. So I entered there. Stop loss was below this candle, which is the first candle of the fair value gap candle. So we have a fair value gap right there, right? Include the volume imbalance. I put it below this candle. Why did I switch my bias? Reason being was if you go to ES, at this point in time, we had swept major liquidity on ES as well. So right here, okay? We swept major liquidity on ES, and we had this impulse up reaction, making this a breaker block. So since that happened, I thought, okay, it's reasonable to expect a retracement after a major sweep of liquidity. That's why I'm going to switch my bias and target this buy side liquidity right here. Entered there, targeted the buy side right here. Now, unfortunately, this was stopped out at break even because we all make mistakes. I moved my stop loss to break even way too quickly. I scaled in my position, so my initial position was right here, and then I scaled in on this fair value gap on this tap right there. So my average entry was about right here, literally. Once we came down here, I scaled in, and then it pushed up, made a new high. I moved my stop loss to break even, and then I came down, stopped me out at break even, and then continued higher. Once it did that, I thought, okay, if I do get confirmation, I'll re-enter the position. So we come down, respect this 1 minute inefficiency, and then we impulse away. Once we impulse away, they give me confirmation to re-enter. And the reason why I didn't wait for this fair value gap to be re-tapped into enter is I consider this a breakaway gap. So a breakaway gap, first fair value gap after consolidation. We have down, up. So it's a very balanced price range area. So for heavy bullish bias, price shouldn't come back down and tap it. It should just straight up push after making that fair value gap. So enter right at that close after that fair value gap was created. Stop loss, including that fair value gap, right above or below midpoint of this wick. So consummate encouragement, and then same take profit, which got met. So that's kind of the art of switching bias and limiting risk, obviously, because I mean we lost about 19 handles here because my entry was for shorts right on that retracement. So right around here, actually, around that retracement. Stop loss was right there, or actually was right above that order block. And then take profit was at the low. So I lost 19 handles, but in return, I won how much? 77, right? So I won almost 4 times what I lost. So I made way more than what I lost in terms of money-wise, and I switched bias, and for the reasons that are very, very valid, right? And that was all I targeted, and you can see price actually pushed up a little bit higher, sweeping these buy sides right here before eventually just consolidating. Okay. So yeah, that's going to be it. Hope you guys found this insightful. If you want more pre and post session analysis just like this, feel free to join my free Discord. Link is in the description. Also, I do have my one-on-one mentorship. So if you want to see if you qualify for that, link for the Calendly to book your free discovery call is in the description. If you're struggling or starting out with trading, that will be good for you. Also, I'm posting my free mentorship in terms of videos here on YouTube. So if you want to tune in and watch that, feel free to do so. All right. Until next time, guys, stay safe and happy trading.